2 decades ago, something extraordinary was happening in China. An economic expansion at a scale and speed never seen in human history was underway. For a nation so vast, its growth was breathtaking. China became the world's factory. Goods poured out of its ports to every corner of the globe. It felt like unstoppable progress, an inevitable ascent. Hundreds of millions rose from poverty into more prosperous lives. But the world changes. Today, that story has taken a surprising turn as the furious pace begins to slow. The IMF now expects growth to hover around 4 to 5% and possibly fall further without major reforms. China's rapid rise was not an accident. It was the result of a powerful equation: cheap labor plus open trade in a world hungry for low-cost goods. Millions moved from countryside to cities, and the world was eager to buy. Cities like Shenzhen and Guangzhou transformed into mega-factories. Entire industries moved east. More than 800 million people escaped extreme poverty. But economies evolve, societies change, and the winning model never lasts forever. Success lifted wages, steadily eroding the low-cost edge. Average factory pay roughly doubled in a decade. Great for living standards, tougher for margins. Low-margin factories must automate, move, or risk being priced out. Aging is accelerating as birth rates plunge. The working-age population peaked near 2015 and has declined since. Fewer young workers enter lines, shortages emerge. Roughly 40 million fewer in the workforce than a decade ago. The hands that built the world's factory are fewer and more expensive. As wages rose, property became the growth engine. Local land sales and heavy borrowing fueled vast builds. Households poured savings into apartments that only went up. The boom fed industry from steel and cement to home goods. At its peak, the sector and its links neared a quarter of GDP. Then debt cracked the foundation. Major developers defaulted. Home sales collapsed and projects stalled mid-air. Local revenues dried up as land deals vanished. Confidence fell. Spending slowed. A pillar turned into a drag that may take years to repair. Globalization built China's rise, but the tide is receding. Protectionism and rivalry are reshaping flows. The US restricted advanced chips and the tools that make them. Europe imposed duties on Chinese EVs over subsidy concerns. Multinationals hedge with China +1, diversifying without exiting. Semiconductors, AI, and industrial software are strategic assets now. When cut off, Huawei's smartphone share collapsed overnight. Open doors give way to guardrails and walls, and China's export model faces stronger headwinds. Automation undercuts the labor advantage that once defined China. Tasks needing hundreds of hands now need a handful of machines, 24/7. Markets reward AI and advanced automation investments. Consistency and quality control make the upfront cost worthwhile. If machines can make it anywhere, firms choose proximity and stability. Risk, not wages alone, drives site selection. Add rising wages, aging demographics, property strain, and tariffs, and the old model runs out of steam. China remains powerful and innovative, but the export miracle era is over. As China slows, a window opens, and India steps in. India's foundation was services, software, accounting, design. Now it pushes into manufacturing at scale. Production-linked incentives, reward-making, and shipping from India. Foxconn assembles iPhones that once came exclusively from China. India's secret weapon is digital, Aadhaar, UPI, and the India Stack. Formalization and instant payments cut friction and bureaucracy. States compete. Fast permits, reliable power, targeted skills. Specialized clusters emerge from the ground up. Manufacturing is only about 13% of GDP, far from China's peak share. Power cuts, clogged roads, and slow ports add cost. Digital systems help, but land and permits still frustrate. Uncertainty can erase incentives if processes lag. Inequality looms. Urban skilled workers surge. Rural millions stall. India must pair high-tech wins with labor-intensive jobs. Broad income growth fuels domestic demand. Without it, scale underperforms. Mobilizing the whole workforce and sharing gains widely is essential to match China's economic scale. India isn't copying China, and that may be its strength. The new goal, the easiest place to build, scale, and ship from. Vietnam wins big as electronics giants diversify. Mexico leverages proximity, now America's largest trading partner. Indonesia taps resources to anchor EV supply chains. India offers wages, scale, relative stability, and a vast home market. China won't step aside. The future is multipolar. A more distributed system could be more resilient. India has a historic chance but must act quickly and wisely to claim it.